US Capital Global. We are a full-service investment bank, and I'm thrilled to be moderating this panel on smart city investment. How about each of us give an introduction about who we are, our backgrounds, our firms, and our firm's investment profile and our investment policy statements. Go ahead.
Hi everyone, thank you for the opportunity. My name is Zhang, and I'm the CEO of an innovation hub called UFirst Capital. We began with the vision of creating a platform that brings the startups, the venture capital community, and the corporations together on the same platform to innovate. I have had a long corporate career, largely at Intel, after my PhD, deep technical roles early on, and then gravitated over to more corp dev and venture investing roles. And that gave us an idea and an opportunity to create this platform which becomes a venture capital extended arm for corporations while creating an ecosystem for the startups and the universities to brew innovation. So that's what we are in a nutshell. Thank you.
Good afternoon. My name is Cady Yu. I work at Berkekey Capital Fund, which I found. Berkekey Capital Fund is an early stage fund investing in life science, material science-based companies. We're very close to UC Berkeley, and we have a lot of deal flow from UC Berkeley as well. One of the unique features of the fund is UC Berkeley Foundation is our special LP, and when we do have returns, some of our carry will return back to UC Berkeley.
Awesome. And US Capital Full Service Broker-Dealer Services. We are debt and equity. We opened 20 years ago, and we have offices in San Francisco and in London. Currently, I don't know if this made it up onto the screen, we are so happy to be advising a company in Norway. It's a $150 million raise, and they have several different smart city initiatives. There are buildings that pipe in servers, server hot energy, so they put the servers underneath these massive buildings and then they pump the energy about 300 miles away, so that's one of our investments. And then the other is the first smart hotel is actually sitting on water in the Arctic Circle, and so it reduces energy consumption by about 85%. So those are some of the smart city investments that US Capital is involved in. We're also blazing the trail in digital security, so perhaps you've heard of ICOs. We believe that the ICO market is not our forte, but we are very active in digital securities. So that's just an example of some of the things and ways that US Capital is very active in the marketplace right now. So let me ask each of you, what are currently the hottest technologies in this sector?
Sure. I think I have a unique perspective to this because I come from a world which is connected in terms of what the universities are seeing versus what the startups are seeing, and I was part of some of the smart building and smart home initiatives, even smart transportation initiatives while I was working for the big corporate umbrella. So there is a lot happening in this space, and the unification of all those pieces are important in terms of how a smart city needs to lay its architecture. So whether it's smart energy, or it is connected energy, or it is the democratization of energy itself, I think those are some of the things which are good individually but can be a lot more beneficial to the community if they start to communicate with each other and they fall under the whole a planned smart city initiative as opposed to solo engagements. So there's a lot happening in the autonomous driving space, like I said, and there have been some great big fat acquisitions in this space, but there have been some companies as well who are trying to do some iterative work, but very breakthrough in terms of stepping into regimes where AI really needs to evolve to be able to deliver the autonomy for the smart cities?
Sure, we actually have a couple more guests joining us here. Thank you so much for joining. So if you could briefly introduce yourselves, your firm, and your investment policy statement, please.
Hi, sorry for being late. The traffic from Palo Alto to San Jose is getting worse and worse, so we definitely need better technology and smart city to make it more efficient. So I'm Lu, I'm the founder and managing partner of Fusion Fund, and we're based in the downtown Palo Alto, focus on earlier stage tech and healthcare investment. And so far we have 52 portfolio companies, over 130 million under management, and we mainly focus on enterprise tech, industry tech, and healthcare tech, mainly B2B startup companies in the United States.
Awesome, great, welcome.
My name is Paula Wong. I myself basically is an angel investor and also serve as a mentor for a number of incubators and accelerators in the Bay Area. So I specifically work with a couple of angel groups like Bank of Angels. So for myself, I basically mostly look at IoT and AI, IoT devices and AI company, plus medical diagnostic area.
Great. So the question at the moment that we're tackling are what are the current hottest technologies in the market? So Ted, I think you're up.
I think we normally don't invest based on what technology is the hottest, but I can definitely speak to that question. So as I mentioned, our fund look at material and life science-based applications. We are very much in energy companies, and we're very much in sensor companies, but I also want to bring to our attention that there's a large segment of technologies and companies that are dealing with human beings. So we are looking at therapeutics. As you probably already know, that investment in cancer and tumor space has been booming in the last few years, and we feel that field is very much over-invested, but aging becomes a sort of a central focus for us. We can't afford to have a smart city with a bunch of not so smart people running around like us, right? So we have to kind of deal with that. So we look at aging, we look at neuroscience and how to tackle, from diagnosis all the way to therapeutics, how to deal with human diseases. And we also look at agriculture with climate changes and with population increase. Inevitably, we have to find sources for protein, sources for carbs, and we want to make sure that we obtain our food with a sustainable way. So we look at biosynthesis, we turn to biotech and see how we can produce food in an industrialized way rather than the traditional farming. So that's what's hot. We also invested in biosynthesis of cannabinoids. I guess that's pretty hot. We deal with that. So that's kind of the general areas that we look at. I'll pass the microphone down.
Yeah, in terms of like the latest tech trend, I totally agree with what he just mentioned, that we're not necessarily always chasing after the buzzword. And as an early stage investor, we have to identify the trend and the direction based on our own analytical research on the industry. But there are definitely buzzwords out there. For example, AI has been a buzzword for a long time. But how to find the killer app for AI, the right application for AI in industry is critical. So the trend we've been following up and also invest a lot is AI in healthcare. In healthcare, for the long term, always have the data overload problem and also low efficiency, which AI could play an important role. Also show the capability of the efficiency improvement and also using all this labeled high quality data to really build up the strong case for AI application. Another tech trend we've been investing is edge computing. We published an industry report in edge computing last year. Well, people always talk about 5G infrastructure. 5G is important to, increase the bandwidth for us to empower the next generation smart city, but we also need to have edge computing in order to reduce further latency, which is critical for all different type of application. So edge computing is another one. And we also are recently looking at more deeply into the female-related healthcare tech, because the matter is for a long time it's a market being overlooked because we don't have too many female technical founder, or female investor. But the market is definitely booming, and now it's also at the edge that the technology application could really generate some new opportunity for female healthcare industry. There are also some other buzzwords on the market right now, not necessarily where we are investing, for example, quantum computing. I heard so many investors came to me ask, okay, what do you think about quantum computing? Is it ready for commercialization? Even big firm like SoftBank is deploying tons of capital into this sector. But we're pretty conservative in terms of quantum computing, still think it's pretty far away from real commercialization. I mean, not only 3 to 5 years, even 7 to 10 years. But that's also another buzzword in the market right now. People have controversial perspectives, so I think it's also good to have some discussion around it.
I think the other panelists probably, cover, most of the, material. But again, I think, high power computing for sure is one of the hot areas, because you look at the smart city, AI, and all these autonomous driving car, right? So the amount of data that get input to the system to need to get analyzed is breathtaking. So definitely, a lot of people do come up with a lot of smart ideas. And then the other thing that we also look at, again, in terms of the healthcare area, because right now the technologies in the medical diagnostic field is also have a lot of advancement. For us, it's just because that dealing with medical diagnostic is not. It's easier than drugs and things like that, or have harder treatment just because of the FDA approval process. But there's a lot of exciting things happening in that area. For example, that a lot of people are training for a lot of a system that you can you can simply do it at home or at doctors clinics, and without sending things to the lab or really high cost.
That's great. I totally agree with everything everyone up here is saying. So we get pitched all the time, right? All of us. What are those key attributes that you're looking at as people come into your firms and start pitching to you? What are those signals for success that you're looking for? Are they tangible? Are they hard? Data-driven points? Are they soft? What do you look for?
That's actually a great question, and it really depends on the thesis of the fund and the stage of the company. So the answer is not generic, but based on the stage of the company, there are different attributes, obviously, that the investors are looking in those companies and those teams. We at Q-First Capital, we are a VC as a service arm for corporations. We recently announced our fund with DowDuPont, and there are several other corporations as well that we're working with, and we'll slowly eventually announce our funds with them as well. Now, again, going back to what attributes to look for if it's an early stage company, and early stage investors here would potentially agree with me. There's obviously there's a lot of weight that investors would generally put on the team, because it's really the strength of the team as an individual, as individuals playing a role in that team, and also the integrity of the team, because those are the two things that are going to stay on and bring the company to the next phase. Whereas if it's a mid to late stage company, obviously there's a lot of things to look at in terms of where the company is going to and how it's, whether it has the capability to hire the right kind of people to be able to scale the company in the right directions. If it's a particular geography that the company is trying to work into, is that the right geography? Is that the right choice? Is the team, does the team have the right capability to take the product out to market in that particular geography? There was a startup that was actually presenting a Z-Space parking idea, I think in the last session or so, and I think it's an awesome idea. But there are, again, if the startup is trying to create opportunities in the United States and has already tried it out in Asia, the question an investor would ask is, do you have the right team that will help you overcome the difficulties and the roadblocks you will encounter to enter into the San Francisco market, as an example? So, I mean, you may have an awesome technology, and everyone who admires technology and innovation would have a wow attached to the whole idea. I mean, somebody who's spending 30 to a minimum of 30 and an hour and a half in parking, and trying to be artistic and creative in terms of parking in many spaces would agree. But then, whether the team has a match in terms of where the product is expected to land is an important question.
So team, of course, always number one, because for sure you want to have smart team member, but at the same time they can really work together to try to solve problem. Not like midway when there's any hurdles coming up and everybody stop working or try to fight each other. So that's very important. And then the other thing is, I think, is the defensible technology. I mean, whether you have enough in terms of the technology lead, such that it's not something that everybody is already having already similar solution. But a lot of startups sometimes they might work on something that already. Some very, very similar solution out there, and already even startup could maybe already have a certain market share, that kind of thing. So when you get into that situation, it's a little bit difficult for the investor to make investment. And then the other thing is that how the team able to react unforeseen situation. So Murphy law is always true. It will happen. So how the team can have a good dynamic working ethic to try to solve a problem is very important.
Okay, I will highlight two things. One thing is, always be clear, what you want to highlight when you're doing the presentation to the investor, right? Even founder may came to us thinking that I have this idea like no one else probably have, but trust us, we may see some similar company already. So really show the differentiation when you're doing the presentation. Try to highlight that. It will really make an impression because, for example, today I already meet 6 companies. Literally today, one day. So if you want the investor to remember what you're working on, try to leave a strong impression by highlighting your differentiation. Another thing, especially for technical founder, because I mainly invest in B2B, I understand I was a technical founder before, and when I was a founder, I really think technology is important. I really like my technology. But when it came to the business, as an investment mindset, we really need to evaluate the market risk and asset risk, which means market validation is important. If you have any market validation data or reference or code from your potential customer, existing customer pilot program, try to highlight that as well. No matter explain it with a use case study, I'll try to show that you are able to close the loop from the initial product to having someone potentially willing to pay for your services or product will be strong validation of your technology. Because as an investor, we could evaluate the risk of technology, risk of the market. But the thing we do not know is what is the reaction from your potential customer going to give it to you. Do you work on something people like, how people need? If something people need, they will for sure pay for it. That's the information we needed from founder, needed from the reference check from your customers.
Very well said, my fellow panelists. If you don't mind, I'll just repeat them again. So we look at team or people, market, and technology, and in that order. So usually we look at deals that are out of universities, and those technologies are already vetted by 10 years and $10 million of government funding. So we typically don't have a whole lot of concerns on the technology itself. A lot of people can make something that do what they are supposed to do. So the only thing we concern in that space is really the intellectual property, make sure that it is structured correctly so that we don't run into problems. In terms of the market, every pitch deck is putting up $10 billion, $100 billion markets. The size of the market is really not as important to me personally. I like to see founders able to segment the market and really identify the space that they have a unique and unfair advantage, to be honest. And of course, we look at a lot of deals with two guys in the dock, so the team, if they break apart, that would be our end. That would be the end of our investment. So team absolutely is the #1 element in our consideration.
It's so interesting because we're all here, we're in Silicon Valley, and technology touches all of our lives and our businesses and everything that we fund. But what's really interesting is the one common theme that we're all talking about is the people and the teams, right? And there is no replacement for that human element at the end of the day, is what I'm hearing. So moving along with a set of questions, what is the return on investment that you look for?
That's an interesting question. And again, it's tied to the stage of the company and obviously the risk the investor is putting into, and the amount of capital. Obviously, it's a balance between the risk taken and at what stage of the company, and so what the typical investors would like 10x, I guess, but. I know of investors who have invested at the seed stage of the company, and in a software enterprise software and infrastructure company, and they've got 40x returns as well. So it's I think there needs to be some reward for the risk, and investors who are investing early are cognizant of that as well, and they'll design their term sheets in a way that their returns are they're rewarded for the risk they're taking early on.
Yeah, I think you and I have clients and investors that are similar in that they look for strategic investments, and so it might not always be a hard number that's set, but it's the perceived value that a company brings into their portfolio.
Actually, that's an interesting point. So when we are working with corporations, that's where with You First Capital particularly, we are designed to balance financial expectations with strategic returns. And our team's background resonates with a deep understanding of the strategic value we can bring for our corporate clients. And that's why the returns are not always financials for our corporations and big corporations who are working with us. But is in terms of a potential revenue channel at times, or an innovation window we are opening up that they never saw before within their internal incubators or within their internal innovation teams. So that's an ROI to them as well.
It is, yes.
Yeah, I think there's a big difference between strategic investor and a financial investor, or maybe institutional investor like us. Because I also got the questions from founder before that they're running a company gonna have pretty good cash flow and potentially exit as like $100 million. Why it's so hard for them to raise money from institutional investor like us? It's because we also need to do our financial model. That's also very important for founder to do that calculation before you talk to different type of investor. For example, for angel or individual investor, if you're running a cash flow business, potential exit is like $100 million. It might be a good target for the individual investor as well, because they could get dividend, they could get good return, sell multiples. But for us, for example, we're a $100 million fund. So we need to think about whether we could invest in a company, at least generate $1 billion potential exit to make back to my fund, minimum, and then be able to generate good return. So when we evaluate a company, I always see good company, especially in healthcare, medical devices, good technology, good founder, but potential upside at most would be 300 million. It's hard. I could maybe invest 1 or 2 in my portfolio in order to balance out the potential ROI, but in general, we have to look for something gonna generate a dramatically return in the near future. I think another thing is, in terms of multiple, we always have the financial model, the projection, not necessarily means all the things gonna go as a planned. I have 3 exits in the past half year. 1 IPO, 2 merge acquisitions. 1 generated more than 20 times the return. I have 1 only generate 2 times the return, but within 1 year. So the IRR number is pretty good as well. So for investor in general, as an institution VC firm, we're doing in general the portfolio management. Maybe another thing founder could do some research on is try to study their portfolio. When you talk to an investor, see which type of company they invested already. Did they already allocate lots of capital into this $0 billion type of company? They may have leverage to allocate capital to more sustainable, revenue generating type of company. But if they already have more than 10 companies doing the B2B sales, maybe they're looking for more billions or multiple billions of the return for the potential candidates for invest next time.
So I think actually, just like all the other panelists, they said that I don't think there's fixed model. In terms of the how many times the return. So each situation is different. Like they said, the strategic investor and financial investor, they actually looking things a little bit differently. But at the same time, sometimes a lot of funded startup also fail too. So in that case, I think sometimes the investor may be happy to just get the money back, right? Actually, often a lot of startup they might have a down round, or they might have even in the M&A situation, they might actually lost money.
All very well said. We obviously have our financial models, but I would rather not discuss that model here. We invest closely related to Berkeley. If you remember, Berkeley last century ended the war, the big one. We did the atomic bomb last year. So one pressure when we make investment, is always how do we make this century better than last century? That's a big question we always look at. That's the return that I'm pursuing, right? So if you think that a company that we invested that produces a drug that saves literally tens of millions of lives, which is indeed true now in Africa, a malaria drug, that's return to us. We're doing something that will end the opioid crisis, which kills 100 people every day here in this country. That's the return we like to have. A deal that can potentially save all the cocoa trees in the world, so we have chocolate, forever, right? Those are big things that we look at. So I just want to shed my view on from a different angle.
Very cool. And US Capital is very like-minded in that regard. Everything that we touch, every deal, every founder, we want to make sure that they do social good and impact. So in summation, I would say it's really important to do your homework as you're raising money and figuring out who you're pitching to and the value you bring either to an institution or somebody who's out for social good or someone who's out as a strategic to invest in your company. So I just want to thank all of our panelists here. Thank you so much for sharing your ideas, and come talk to us afterward and ask us more questions, because there's definitely information that we would love to share with the community. Thank you, everyone. Thank you.
Thank you.